Good morning. Today's Monday, February the 1st, and I'm David Song, currency analyst with DailyFX.com. Just here to give you a quick wrap-up of what we saw during the European session and what we can expect going into the U.S. trade. So we saw some mixed price action overnight, where we saw the euro dollar actually halt the 4-day decline with the exchange rate rising back above 139, while the British pound actually extended the decline from the previous week with the exchange rate slipping to a fresh 2010 low of 158.51. As given for the economic data, we saw some slightly better than expected data from the Eurozone, where we saw the manufacturing PMI increase to 52.4 from 52.0, while we saw some slightly weaker than expected data from the UK, where we saw mortgage approvals fall to an annualized pace of 59.0K from 60.5K to mark the first decline in over a year. At the same time, we saw consumer credit actually unexpectedly increase 0.1 billion during the same period, after contracting 0.4 billion in the previous month, while we saw the UK PMI manufacturing increase to its highest level since 1994, with the index increasing to 56.7 from 54.1 in the previous month. So going into the U.S. trade, we're going to actually get the U.S. ISM manufacturing report, and we're expecting the index to actually rise, slow down to 55.5 from 55.9 in the previous month, and at the same time we're expecting to see slower growth in personal incomes and personal spending. And as a result, if this data flows through and we see some rise in risk conversion, we'll certainly expect that to taper off the advance in higher yielding currencies such as the Australian dollar, euro, and New Zealand dollar. But just keeping on one of my trades, after exiting my euro pound short position during the previous week, we actually saw the exchange rate rise to a high of, we actually saw it rising back above the 81 level. But again, as the pair continues to hold below the 200-day SMA at approximately 0.8836, I continue to hold a bearish outlook for the pair, and continue to watch my analyst pick to see what I'll do next.